Welcome everyone, another episode of the Aggregators and the Brands show, together with me, the CEO of Eva, as well as we have Omar, who's my co-host, who is the head of the founder of the Margin business. And we have a great guest today. We have David Mood from Olsam, one of the largest and fastest growing aggregator from Europe. I am not sure if you are the biggest right now, but I'm sure that you are one of them. So David, welcome to the show.
Thanks for having me. Really excited to be part of the podcast.
Great to have you here. Great to have you. Sorry, hi, that I just cut you right now, but I just wanted to go directly in because, I know David is really busy. He just got back from a trip. He had, again, deals going, as aggregators do. He is the head of investment at Olsam. And we want to know more about what is going on and maybe some of the strategies, what Olsam will looking at in 2022, maybe 2023. So David, please tell us a little bit about everything, what we need to know about the aggregator space, or what is new.
That's a very broad question. There'll be quite a lot to get into.
Sure.
I think overall, in kind of the first instance, I joined Olsam early last year to head up the investment team. A big part of the reason and why I think we're attractive to brands is that we're really growth focused and really selective of our strategy, and really want to focus on specific categories that we can build expertise, know-how around to help brands not only go onto Amazon, but also e-commerce, D2C, work with wholesalers, and longer term down the road go into retail. I think there's quite a bit that goes into running an Amazon FBA business, from branding, supply chain, logistics, marketing, PPC, account management, and then also multi-channel account management and wholesale relationships. And our focus to build the team that when brands come to us, they maybe taking it to a certain size, but they're really now looking for a partner that can kind of help them go to the next level and really turbocharge the brand to reach its true potential. And we believe there's so many great brands on Amazon that have nowhere near touched on the potential they can get to, because they might be capital constrained, they might be just kind of people resource constrained, or bandwidth time constrained because they have other commitments and they cannot really lean in and give it everything they have. And that's why we think Olsam is a great partner to come in and help you get there. And strategies are there's opportunities to lean in everywhere, and it's particularly a big challenge last year: supply chain, logistics, staying in stock, PPC marketing costs increasing. It's getting more sophisticated. You need to invest in the tools, technology. You need to have people who really understand, but also who are on top of the campaigns every day, every week, every month. And it's really difficult to take the foot off the gas, so to speak, on some of these brands. And then it's really about expansion, new geographies, variations, new products, and then more channels, building your brand, social commerce, influencer marketing, everything that goes with it. It kind of goes in phases, and you're not going to do everything kind of at once. But what we really like is brands where we see the 3 to 5 year plan. This is not something we kind of come in and we think we're going to do 1 or 2 or 3 changes, but it's something we can kind of continue to invest in and grow. And these are typically branded products in great categories: outdoors, pets, baby, home and kitchen. Travel is a great category right now, and many others. That's where we think we're also the best home for brands. We have many people in our team that know what good looks like. They worked at larger brands, they worked at large operators, they know what a supply chain of a multi-$100 million business looks like. They've run marketing campaigns with budgets that are 10 times larger than many of the large Amazon FBA brands. And kind of in the founding DNA with Sam coming from Amazon, being an Amazon FBA seller themselves, the serious operators next to me, I'm more the investments finance person, but then we have kind of serious operators around both the management team as well as all the way to some of the junior members of the team.
Got it. Wow, that's very exciting. Maybe like you already mentioned the categories, because that would be one of my questions, but if you want to add to that, that would be great. But my understanding is you are not only looking at the Amazon FBA brands, but brands who have also maybe presence in Shopify, maybe they have their D2C channel, and these are kind of the growth opportunities. Is that right, or not really?
Yeah, there's really two schools of thought. There's some aggregators that only focus on Amazon FBA businesses, and that actually like them to be 90, if not 100% Amazon FBA. These are also businesses we like to buy. In an ideal scenario, we come in a company and they've already built a presence on D2C. Maybe it's small, they've invested some money, they kind of they had the pilot, the proof points, the beta version, which we can build up, professionalize, as well as maybe they have some strategic partners, some wholesale relationships, but they've been growing organic because they've never could really build out a partnership team or wholesale team, which is going to go out and find partners, go to industry conferences and find that partner which is going to allow them to sell in it could be Japan, India, Australia, maybe where the business doesn't have a presence, and this is where we can lean in and bring the resources to explore, because we know the brand has a lot of potential. It just didn't have they didn't have the necessary bandwidth resources to go after these opportunities.
Okay, that sounds perfect. I mean, when we talk about brands and the aggregators, every time what comes in my mind is that as well, now we have smaller brands who are trying to get bigger. Now I think they kind of get intimidated right now because of the size of the investment. I mean, if somebody is watching a little bit the Amazon news, then he knows what's going on. There is lots of money flowing in, which means for smaller sellers that they need to step up, which doesn't mean that they're going to lose, but they need to step up. So I think as well, and I call people who don't have an Amazon business yet and really want to open an Amazon business and watch this video right now to still do it, because it's possible. But they should not watch the videos from 2 years ago or 3 years ago, where you can just what was the funny thing from Helium 10? I think it's like a shelf, like a shelf, and then you buy a shelf, you put them on Amazon, and then you just sell 200 per day, 200 units per day. I think this type of business is over, because you need to have, like you already said, brands, somebody real behind it. Like if you love sports, do something what is associated with sports where you can stand behind. So this is something I would really recommend, and then still grow and then even sell it to aggregators. So because right now what I see is as well that the aggregators are taking a lot over. They buying a lot of brands. So I don't know if I see this correctly, but it seems like they're buying everything. It's like, okay, and now we have this big brand and this big brand, and there is almost, okay, we cannot say almost nobody anymore, but a lot has been taken. So what do you think? Where do we go, and how can we make sure that we have other brands coming in and and trying it as well?
I think there's so many things to get into. I mean, you guys know this better than myself. I think one is there's so many resources, this podcast everywhere across the internet on how to start your Amazon FBA business, and there's so much knowledge you can which is now available, which wasn't available 5 years ago. Seller communities, accelerators, programs, training courses that allow you to set yourself up for success to kind of start with. I think that's the first point. I think that the second point, there's an advantage to being large, but there's also an advantage to being small. Particularly, as you said, particularly as some of these really large aggregators that are getting to 50, 100, and 150 brands, they're not going to have the specialized knowledge, attention to get into every subcategory there is on Amazon. Particularly if you're a motorcycle enthusiast and you really understand the customer, what they need, what type of products, what are the different models of motorcycles, that's going to be very difficult to replicate for an aggregator. They would probably want to continue to work with you, have you as a consultant, but you can develop a real edge there. That's kind of the second part. I think the third part is what you said. There is a lot of money has kind of flown in, but even before that, the space is professionalizing. You need to up your game. You need to continue to educate yourself on marketing, PPC. You need to invest in tools. It's definitely something which is becoming less of a side hustle and more of a professional. You have many full-time professional Amazon FBA sellers. These are not only aggregators. These are people who've done this over and over again. They're on their 4th brand, 5th brand, or they're running 5 brands at the same time. They've built a team. There's people who really understand how to tackle the Amazon FBA market, and there's still lots of opportunity to get into that. And that's the final point is it's an absolutely massive space. If you take all of the aggregating revenue as a total, I'm not even sure we're gonna break 1% of the entire Amazon FBA ecosystem. It's a really, really massive opportunity, and it continues to grow as Amazon grows and also internationally. So I think it's still a very exciting opportunity to get into the market. And what the aggregator, I think 2 things everybody's keeping everyone honest. You kind of need to up your game, provide the best services, products for customers. But then on the other side, there are now exit opportunities, liquidity opportunities for sellers that weren't there previously, and multiples have gone up from where they were 2018, 19 to where they are today. So it's more attractive from an exit standpoint. If you at some point want to sell your business, there is a bigger safety net that if you've had some success, there's that option to sell to an aggregator, a larger brand conglomerate.
Right.
Okay.
So in terms of size of the brands that you are looking about, like when it becomes attractive to you, like in terms of like an annual revenue, like are you looking at brands less than $1 million, more than $1 million, more than 10 million? What's the sweet spot for you?
So we're really, I would say we're sort of category first, and we really, if we really like the business, the brand, and the potential, and we see a lot of growth potential, we can go quite early. And early for us is $1 million in revenue. We really like businesses anywhere from $5 to $25 million. So we're also looking at many of the larger opportunities. I think if you're kind of in the early phases, I think it's really important to make your business sellable, that it's A, branded, but B, is very focused in terms of its products, its categories, its supplier base. I think what's going to be difficult for an aggregator to buy a smaller brand is if you're doing $1 million, but you just have so many products, you're working with 20 different suppliers, and it's from a kind of acquisition integration standpoint quite complex. Best thing when you're small, try to streamline, simplify your business as much as possible before selling. And then as you get larger, that becomes less of a problem. If you're a $20, $30 million seller, there's expected that you have quite a few products, geographies, suppliers, different contracts and relationships.
Got it. I have another question, which is kind of something that I'm really wondering, and for every aggregator it might be different. Now, Olsam, you guys are on your 2nd year, roughly, maybe third. But what's the future of Olsam? Like, okay, so you are now in that acquisition mode because you have the funds. But what's the kind of like what will happen in 5 years? Like, is this because you talk about the brand's exit strategy? Is there an exit strategy for Olsam? But you also acquired another small aggregator, if I am not mistaken, at some point. So which means that one of the exit strategy for aggregator is like to be acquired by another one. But let's assume like everything goes fine, you're growing. What's the essence of that? Like what will happen in 5 years with Olsam? What do you think about that?
In 5 years, I think there's two preferred options. Either we go public, or we're just a large private company because we're actually cash flow positive. We can kind of sustain ourselves. We're not reliant on additional public funding. Sort of kind of these two bigger options. If you're, I think, particularly with the acquisitions that we did, some aggregators, they might acquire a number of brands. They maybe didn't have the operations background, or they didn't have the access to, capital, couldn't build the team. They might decide, the best route of option, the best exit option for me is to sell to another aggregator. I think we're already at a scale. We want to be, quite ambitious team to build a large company. And, the long-term, vision of Olsam is really to be a technology platform where we plug into not only Amazon, but plug into all digital marketplaces internationally. And then we can have our own brands, but also working, potentially with other sellers to allow them to sell on all marketplaces and, enable, because we think that it enables the best experience for customers, enables competition, like I was saying, keeps everyone honest, and it's a good experience for, I think, both the kind of like the buyer and the seller. And that's, I think, that's really attractive to be both a very large private company or a publicly listed company.
Okay, that's wow, that's already really good, because when you're as soon as it gets publicly listed, then this is a whole other ball game, I would say. There is a lot going on in the aggregator space. I'm going a little bit into the direction of that. Now we have there is an own ecosystem, and opportunities are creating themselves out of the investment that has been done on these aggregators. I just recently read an article, that's why I'm bringing this up. So the former Thrasio CTO launches a capital as a service acquisition after raising 12 million. I mean, it's completely, crazy at one point that now we have, out of all this aggregator space, which is on Amazon, now we have other ecosystems coming out. So other companies, new work created, obviously most of them remotely from home. So I think the space is so young and so fructive that, that we really can grow so much that we, in a few years time, if Amazon keeps growing that way, there will be an amazing space, of new creations, of new business ideas, of new business opportunities. So really, I'm very positive about that. What is your thoughts about that?
No, it's really exciting. I think particularly we know that funding is a massive problem for essentially small sellers, and large aggregators understand the risk profile. You get the data, you have more of your data from your own company, so it's a natural progression for somebody and say, hey, let me essentially, the same way we can use financing as a larger player, can I kind of apply that to a group of smaller players, enable them to grow, invest behind the brand. I think there's going to be more service offerings. I think both on product launch and then on the technology. There is a great off-the-shelf products available, but Amazon is changing, growing, and we're building our own technology. And I think also on that side, there will be some CTO of one company spin off or head of engineering and say, hey, let me build something which is pretty similar, kind of using the same tools in terms of automation, but providing it to the ecosystem smaller seller. It's going to be, I think, like you said, there's going to be many more spin-offs, and we're going to see more announcements similar to the one we've seen recently.
Right. I think, by the way, David, like maybe Olsam or SellerX or Berlin brand groups, like all these very big aggregators may think about the same thing that Trust.io is kind of going through, because they acquired Yardline Capital, but Yardline Capital, and there is a lot of funding sources, like there are companies like that in US, but I see only a few in Europe, like that are fast funding, the Amazon smaller sellers, because if you fund them, they can grow faster to the point that maybe you want to acquire them. but there is definitely that lack of funding right now, like fast funding in the Amazon space in Europe. Maybe that's an opportunity as well. I would definitely go and invest into that.
It's only that's really with the aggregator space, because it's really shining the spotlight on all these essentially what are small businesses but these are really backable, successful, profitable businesses that you can essentially provide capital to them. And I think for many institutional investors, they were step two removed, and now with the aggregation space and people now going out and setting up new companies, approaching capital providers to say, hey, I have this really interesting pool of sellers that need funding, they're really successful, profitable, and then we're doing that at scale. I think that's also what Thrasio has shown. The aggregation, the acquisition model wasn't particularly new. I think what Thrasio has done is that you can do this at scale, and you can work with many smaller sellers and support them and grow them quite significantly.
Right. As we are coming to the end, I also want to ask the question more related to the brands who want to sell their their companies. So basically, let's assume there is a brand doing already $10 million, and they decide to sell for whatever reason. Now, there are different options here. Sometimes even we are confused. What's the best option for the brand? Yeah. For example, the first option, go and work with a broker. Is this the better option? Or, directly approach to you, because you guys are, already, trying to even use the different people to refer to you, the brands. But if you were a brand, what will be, and if you have the decision now, it's the time to sell, what should be the next steps for the brand?
Yeah, I think there's very different opinions on this, right? Some, they get advice from somebody, say, who have you worked with, had a good experience with, they get a warm introduction. Others, reach out to pretty cold to 5 to 10 aggregators, trying to get an idea. I think overall, if you're in this, I think either if you're kind of small and have a very, if you have a simple business in the pets or outdoors or home and kitchen space, I think feel free to reach out to aggregators directly, get an offer. I think both do your research on them, listen to podcasts, what is their strategy. I think you're choosing both a price as well as to some extent a partner. You still have to work with this group. Sometimes you're involved through the migration period, sometimes longer, so something agreements. So I think it's important that you kind of focus both on the evaluation and the partnership. If you have a business which is maybe in a specific niche, which is maybe a bit more complicated, a broker can really help you navigate that field. They can kind of help you know who to target specifically, and they can add a fair bit of value. But working with a broker is not cheap. So for pretty streamlined standard businesses, I'm not sure it always makes sense. Sometimes it does, sometimes it doesn't. And then with businesses that are a bit more complex, are maybe in very specific niches, a broker can add value and help you find the right buyer. And I've seen it kind of play out this way also, where maybe they've spoken to some aggregators, didn't really get the traction, went to a broker, and they could kind of help them find the right buyer. So I think it really depends. It's also very, people have different, I think also very different opinions on that matter, like you alluded to.
Definitely. Thank you so much, David. I mean, I don't even have a question anymore, because you replied to all my questions that I had in my mind while explaining this, your valuable opinion and information to us. Hi, do you have any more questions for David?
Yeah, I have a final question, which is, we talked about the Olsam, we talked about how the brand should, approach to exit. What about maybe, you can tell us about what's your recommendation now to the brands which are smaller, maybe in 6 months to 12 months, they will think about, not today, but in 6 to 12 months, they will think about an exit strategy. But what should they do right now as they are trying to prepare for that exit, what are the kind of the homeworks like on their side?
Yeah.
They're running the business, but they want to sell, but it's 12 months away ahead. So what should be done now?
Yeah, I think this one is, I mean, you can always, I think, kind of continue, to grow the business, perform well, really, look at your, portfolio. What do you think is kind of working well? Where should you double down? I think this kind of, continue what you're doing it really, and invest in that area. I think the other part is, I think, 3 areas. I think one is, I think mentally, like really prepare, like, are you ready to sell? What does it mean for you? And getting kind of like in the right mindset, educating yourself. What does the process look like? Who is it? Maybe some of the buyers, the brokers. I think that's kind of one area. The second area is really getting on top of your financials. Hire an accountant, get your accounts prepared, maybe have a trial run now already, know how you kind of performed, make sure there's no discrepancies in your understanding. Ideally work with an accountant that is working with Amazon FBA businesses or has worked with aggregators before. And then the third area, I had another area in mind, which I think is really important to grow. And then the other thing is, I think this is probably the most important thing with Matza, like, you got to sell your business. If you want to get an attractive price, you got to sell your business. And that goes with, like, what's the story and what are the growth opportunities? And I think for some Amazon, it's they all know about it, but they maybe don't rave about it or sell it appropriately. Like, why are you excited about the expansion opportunities? What products have you had on your list but couldn't launch so far? What do you think is the opportunity for those? So really coming prepared with a growth plan and what you think is the potential, in addition to the story, why you think this is a really strong brand. Nailing your pitch, this can be a decision between buying a brand or not buying a brand, because as much as it is about the numbers, it's about the potential and where this brand can head to over the next few years.
Right. Okay. I mean, that was really a great summary of what they should do. So thank you very much for all the information, David. We really appreciate that. And thank you for being our guest. Thanks
for having me. I appreciate all the great questions, and keep on what you're doing. Really enjoy the podcast.
Thank you.
Thank you.